It's clear real estate has peaked, and if interest rates do continue to increase as has been hinted, then real estate will crash by at least 25%. It took real estate 10 years to regain its losses from 2007. So if this is worse than 2007, then it could be at least 10 years until the real estate market recovers. My name is Christian Garcia, and I'm the founder of HomeLoanCycles.com. I was trained, taught, and subscribed to the idea of boom and bust economic cycles. Part of successfully navigating through these cycles involves having to act when the timing is right based on the current economic environment and indicators. And right now, the timing and indicators are signaling for real estate to correct or go down, and I'm going to show you information that your local realtor or real estate agent has not shown you. This is inside information you will not get anywhere else. I've been a real estate broker in California since 2006, but since 2004 I have been able to access the multiple listing service or MLS along with being a loan officer or consultant. For those of you not being familiar with MLS, the benefit of MLS systems is that an MLS subscriber, or in most cases a real estate agent or broker, may search an MLS and retrieve information about all homes for sale by all participating brokers. MLS systems contain hundreds of fields of information about the features of a property, whereas public real estate websites like Zillow contain only a small subset of property data. Not only that, but the MLS I have access to is up to date, up to the minute, whereas the other public websites are not. And some of the data that I as a real estate broker have access to is what I want to share with you because it proves and displays in real time how the real estate market is going down. This is inside information that the public has no access to, but I do as a subscribing MLS member, and since it is my fiduciary duty, I will reveal this information to you. Normally, I am allowed to only share this info with my prospective clients per MLS guidelines, so I will assume if you're watching this video, then you're a prospective client of mine considering to use my services. And you can get my phone number at the end of this video, or go to my website, HomeLoanCycles.com, for any home loan consultation. Plus, I'm going to show you how to take advantage of the situation and give you options. Remember the 2007 housing crisis? What would you have done differently? Again, this is information you will not get anywhere else. Look at this and you tell me what you see. Here I am logging into my local MLS. I'm going to go ahead and start and do a little quick search. I'm going to go ahead and start where I live here, where I grew up in Los Angeles County. And I'm going to stick to Los Angeles City since it's pretty popular, very diverse city. I'm going to stick to active listings here and just to single family residences. Currently you can see there's about 1,500 matches or a little bit more. I'm going to go ahead and put a price range here of $636,150. The reason I'm sticking to this number here is because currently in LA County, to qualify for an FHA loan, the FHA loan limit is $636,150, and the reason I'm sticking to that specific loan product is because most people qualify currently and buy under FHA. FHA is the #1 first-time home buyers program. You only have to put 3.5% down payment, whereas most other loans require you to go ahead and put down anywhere between 5 to 10% down depending on your credit score. So that's why I'm sticking with this number. And as you can see, that leaves us with 392 matches. So let's see what we got here. So these are the listings for sale in Los Angeles City. I went ahead and blocked out the current addresses for the moment. I just want you to focus on two columns, the listing price and the DOM, or the days on market. Now, CDOM just means combined days on market. So some properties, for example, if you look at this one right here, it's been on sale for the last 24 days, but combined for the last 2 years, it's been on sale for a total of 59 days. So this is not consecutive, this is. But either way, it stands for days on market. Now for this exercise, what I want you to pay attention to as I scroll down and show you these listings are these arrows on the list price. You can see red down arrows and you can see a blue down arrow, up arrow. The blue up arrows, what they stand for is there's been a recent change in price. So for example, this blue arrow right here means the agent has logged in and recently updated the price and increased the listing price. At the same time, these red arrows stand for a reduction in price, meaning the agent logged in and reduced the price. So red arrows means recent activity, price reduced. Blue arrows means recent activity, price increased. And I'm going to go ahead and rearrange these property listings from newest to oldest. So you can see they come in sequential order: 1 day, 2 days, 4 days, 3 days, 4 days, 5, 6, and so forth and so on. So again, I want you to focus on the listing price and the days on market. And what I want you to look for are any arrows so you can get an idea of the trend that is happening before our eyes. So as I scroll down, you can see there's no activity. There's a couple of down arrows. And there's not really too much activity. It's only been the first 11 days, right? So let's go to page 2. There's 100 listings, as you can see here, per page. Now, as we get closer down to 30 days, I want you to keep something in mind. Here in LA County, there's a saying: if your property is for sale or on the market longer than 30 days, there's something wrong with it. So let's see here. Okay, there's an up arrow, down, up, down, down, down. As you get closer to 30 days, you can start seeing more activity picks up. But you can see the majority of activity is downward arrows. And as we progress further down to more days, again, the days on market is increasing. Look at the down arrows. You can see it's completely outnumbering any up arrows and the activity. So you can see that the trend appears to be homeowners or their agents are reducing prices. As the properties stay longer on the market, you can see here 100 days or so, there's more downward arrows. So you can see that the trend seems to be that the prices are going down, or at least the homeowners are not getting as high bids as they expected. So they're reducing the prices. So I just showed you Los Angeles. Let me show you this top 10 list from the end of 2008. It is the top 10 US cities with the highest foreclosure rates. You can see that 6 of the top 10 cities are right here in California. Number 2 is Merced, California. Now, Merced, California is in Merced County. Now, I'm in LA County, so I'm going to change this to Merced County to look at Merced so we can see how the activity is there. But I just want you to keep something in mind. See that there's 116 listings. These are not all the listings available because I am in Southern California. So I only have access to the ones in here pretty much in Southern California. Now, what I have access to in Northern California is because these brokers are willing to share it here with down south. So this is not an accurate list of everything that's for sale, but it gives us a little idea of what is available in activity. Again, you can see as the days on markets progress, boom, look at that. Majority is downward arrows or are downward arrows. And look at this. This is the last page. You could see here that almost every single property has lowered the price. So the longer it's been on the market, you could see clearly the frustration from sellers and they're selling. Let's look at number 2, or let's look at the next city, which is actually number 4 on the list, which is Stockton, California. And that is an actual, Stockton is in San Joaquin County. So let's go look at Stockton. You might have remembered Stockton actually declared bankruptcy too. So not only do they have a high foreclosure rate, but they actually declared bankruptcy. And there's only 7 matches. Again, they're in Northern California, so I don't have access to everything that's available. So this is a bad example, but I just wanted to show you that at least so you can see it. I'm not being a little biased and withholding that. It's just that I don't have that information. So let's move on to the next city on the list, which is Modesto, California, and that's actually in Stanislaus County. So you can see here, let's see, boom, there it is. And let's go ahead and plug in Modesto. Boom, there it is. Okay, there's only 6 matches again, so they're in Northern California. But hey, there's, you can see even here, it's still outnumbered 2-1 if you want to look at it that way on downward arrows. Let's look at the next property, or the next city on the list, which is Riverside. Now, Riverside is in Southern California. They're still pretty south. LA is in Southern California, but Riverside is literally close to even further south, close to the border. So we got a good little idea, though. There's actually more properties for sale that I have access to than LA. So that just shows you how big Riverside County is. So we should get a good sample size here as well. I'm going to go and scroll down. Not too much activity on the first page. Let's go to page 2. Look at the activity. Okay, again, you can see kinda it's the arrows. We're starting to get closer to 30 days, and you can already see the downward arrow trend, or people adjusting the price. Look at that. As we start getting closer to 30 days on the market, even though this is Riverside, California, the 30-day mantra still holds true. And look at that. We hit 30 days. And look at that activity. The majority of people are trying to lower their prices. And they're lowering the prices because they're not getting any bids. So here we go again. This is the next page. Look at that. Once you get past 50 days, look at that. The majority of people are lowering their prices. They're not getting offers. Let's go to the last page here. Again, the majority of people are not getting offers on their homes. The next city on the top 10 list, Bakersfield, is actually in Kern County. So let me go ahead and adjust this here. Kern County. And, oh, I got it backwards. So sorry. So let me go ahead and adjust that. There's Kern, there's Bakersfield. There's only 61 matches. Now, Bakersfield was another city that also declared bankruptcy in California, so they're going through a major crisis. There's only one page worth of stuff, but look, you can see it's pretty much also downward arrows. But I want you to look at this, though. Even though you see these up arrows, it's because you can clearly see the prices are out of whack, or this is a short pay, so the price is low, so they're increasing it. This is a low price, and this is a short pay. So they put low bids to try to get offers, and that's why they're increasing the price. And the last city on the list is Vallejo. And Vallejo is in Solano County, and this is another city that is in Northern California. So there's Solano. Let me go ahead and punch in Vallejo. There it is. It's only 3 matches. Again, I don't have access to all that, but hey, one of the 3 you can see there it is. Prices are going down. So I showed you this because in 2008, California was leading the foreclosure crisis. So as California goes, most of the country goes. This downward trend in home price changes is also happening in the rich part of California. Let's look at Beverly Hills. I'm sure everybody's heard of Beverly Hills. That's in LA County, as back to where I originally grew up, like I said. Beverly Hills, so there it is. Now there's 0 prices or 0 matches because the price is over here is $636. Clearly the homes in Beverly Hills are much higher than $636,000, and you can see there's 208 matches. Now, so let's go here. Boom, oh, look at that. 30 days. Oh, there's activity starts picking up. Look at that. And what kind of activity? Downward. People are lowering the prices. Let's go to page 2. Again, look at that. So in Beverly Hills, people with money, look at that. They're lowering their prices as well because they're not even getting offers. Okay, so I just wanted you to look at that. This is Beverly Hills. Look at that page 2 again. This is people with money. Look at these homes. 4 million, 14 million, 7, 23 million, 13, $2 million. So these are people with money and they're not putting bids in. Let's look at Hollywood. Hollywood is another well-known city. So let's go ahead and plug in Hollywood. There it is. Oh, look, Hollywood Hills. Let's go ahead and look up. Let's see what's up in the hills. There's 12 matches. All right. So let's see what's there. It's a very exclusive part of town, right there. So let's see. And look at that. There's not too many properties for sale, but even that, even though look at that, there's not even that much supply, and still people are lowering the prices because they're not getting any bids. The Los Angeles Times ran an interesting story about a city called Arcadia. For those of you that are not familiar with California or here in the area, Arcadia is known as the Chinese Beverly Hills because there's a huge Chinese population there and they have a lot of money and they invest heavily here in Arcadia. So let's see what's going on in the Chinese Beverly Hills. Look at the activity. We're past 30 days now, so you can see the activity's picking up and it's starting to show again. Downward trend. Let's go to page 2. Boom, look at this. Still, you could see that when there is activity, the majority of the activity is people lowering their prices. Look at this, further out. The majority of people are lowering the prices. Now look at this graph from RealtyTrack. Flipper profit margins have declined and flattened out. How can flippers flip when prices are no longer rising? If you want to sell your home in California, contact me. I can help you with that. Go to homeloancycles.com. I wanted to show you all of this so you can see that there is an overall trend in the real estate market in California. Since we led the foreclosure crisis in 2008, I think it's fair to say we're going to lead it this time around. And you can see clearly by the MLS or multiple listing service data that the trend is real estate is going to start going down. People are not getting offers. This is the type of research and analysis that you're going to get from me here at homeloancycles.com and buythedips.com. If you're a homeowner and would like tips on selling your home quickly in this real estate cycle or how to negotiate lower commissions with your real estate agent, become a subscriber at buythedips.com. Don't forget to allow me to pre-qualify any person that wants to buy your home. I can do loans nationally in all 50 US states. Make sure you have a valid offer before accepting it. I can help you approve any buyer. Or if you're a real estate agent and want to know how to increase your commission and sell more homes in this real estate cycle, become a subscriber at buythedips.com. Home prices will begin to fall. It's part of the cycle. We've peaked and reached the tipping point. Home prices are going up still as the chart from the Federal Reserve shows, but it appears we're back to 2007 levels. And if you look at the Case-Shiller or National Composite Indices for year-over-year change, you can see price gains have been decelerating since 2014, even though they're still barely rising. You can see that the rate of appreciation is slowing down. In 2014, real estate nationally averaged almost 11% appreciation and upwards to almost 15% in the top 20 and 10 real estate markets. Now appreciation is down to under 5%. This trend is showing we will reach 0% annual appreciation or the zero bound within the next couple of years or by 2020 at the absolute latest. But it's not all doom and gloom. Again, it's just part of the real estate cycle. Another major factor contributing to lower real estate prices is higher interest rates. Let's acknowledge and come to terms with and accept what is no longer a debate. Interest rates are going up, and interest rates will continue going up. Yes, interest rates will continue going up. Drill that into your head. In December 2015, the Federal Reserve confirmed this by taking real action and in the first step by raising the Fed funds rate by 25 basis points to 0.5%. On September 21st, 2016, the Federal Open Market Committee, or FOMC, released a summary of economic projections. In Business Insider, their article states, the dot plot, part of the FOMC's summary of economic projections, released along with the policy decision statement, shows where each participant in the meeting thinks the Fed funds rate should be at the end of the year for the next few years and in the longer run. Each of the 17 members of the FOMC anonymously provides their predictions for the target Fed funds rate at the end of this year, each of the next few years, and in the longer term. The Fed releases those predictions in a chart that includes a dot for each of the members at their target's interest rate level for each time period. In the release after June's meeting, the dots indicated a dovish path for rates moving forward, and then rates eventually rising to around 3% in the longer term. You can see their graph clearly projects and forecasts higher rates until 2020. As interest rates go up, home values will go down. Think about it. Currently, to get approved on a home loan, you must go full doc. meaning as a borrower, you have to prove all of your income and show tax returns and bank statements. So with interest rates going up, more of a borrower's payment will go towards interest, resulting in less going towards principal, therefore qualifying for even less than is possible right now. Yes, your purchasing power goes down as interest rates go up. Just a 1% increase in rates leads to an almost 11% drop in purchasing power. So if the FOMC wants the Fed funds rate to rise to 3% as stated, that's another 2.25% from where it's at right now. And as mortgage interest rates adjust to keep up with this, we're talking about close to a 25% loss in purchasing power. So as home loans become more costlier because of higher rates, the less affordable that home becomes. Combined with the fact that people's incomes are not going up, and new potential buyers like college grads or young families are moving back in with their parents because of too much student debt, the result is the supply of qualified buyers is dwindling. Basic supply versus demand. The National Association of Realtors confirmed this themselves on February 16, 2017. NARRealtor.com identified growing rift between housing availability and affordability. Existing home sales are forecast to expand 1.7% in 2017, but a new housing affordability model created jointly by the National Association of Realtors and Realtor.com suggests home buyers at many income levels could see an inadequate amount of listings on the market within their price range in the coming months. It's clear real estate has peaked, and if interest rates do continue to increase as has been hinted, then real estate will crash by at least 25%. It took real estate 10 years to regain its losses from 2007. So if this is worse than 2007, then it could be at least 10 years until the real estate market recovers. The last major peak in real estate prior to 2007 was in 1989. And US home prices didn't exceed that 1989 high until 2001, 12 years later. The next preceding major high was in 1971, and it took real estate 10 years to recover from that downturn. I follow a cycles investor by the name of Martin Armstrong, and his real estate business cycle shows starting from the 2007 high, this should be a 26-year contraction in real estate similar to how real estate behaved prior to the Great Depression. We've already gone through 10 years of that 26-year contraction. You can see the recent increase of real estate was more of a dead cat bounce type reaction before the coming overall correction in real estate prices begins over the next 16 years. Look at this mashup of the Case-Shiller Home Price Index and Martin Armstrong's ECM. You can see how the peaks eerily line up. If Mr. Armstrong is right, and he does have a good track record of being right, then this is definitely the time to move on to the next wealth transfer. Plus, as interest rates rise, the capital flows and wealth cycle will continuously transfer internationally into the United States and domestically from the real estate and bond market into the US stock market. You can learn more about these cycles by watching the video on the sequence of asset class cycles at buythedips.com. Don't be fooled again like 2007. Take advantage of the situation. Just an idea, my real estate and mortgage clients are cashing out of their homes or investment properties and piling into the stock market. Once the stock market peaks and real estate prices and precious metals are lower, you can make the switch back to commodities like gold and silver or real estate for some cash flow and continue riding the wealth cycle, or you can pay back your cash out loan and reduce your mortgage and pay it off sooner. It's up to you. As always, it's not all doom and gloom. Crisis breeds opportunity, and if you act quickly, you can take advantage of this opportunity. Please, if you want an individualized mortgage consultation, visit homeloancycles.com and register there. I or another qualified individual trained with my philosophy will help guide you through this and discuss the best course of action, if any. With interest rates still low, combined with home prices peaking, taking action now may make sense. Go to homeloancycles.com for more information or to schedule a callback, or call 877-9CYCLES or 877-929-2537. If you are older than 62 years old and don't feel comfortable about your retirement situation or your 16-year outlook for your financial life in the next 16 years? A reverse mortgage may be an option for you and help you bridge the gap between where you're lacking right now and get you to where you may want to be and need to be. Again, with this being the time closest to the lowest interest rates in history, combined with home prices peaking, then taking action now may make sense. Go to homeloancycles.com for more information or to schedule a callback, or call me now at 877-9CYCLES or 877-929-2537. Thank you for your time and be well.